Hello, everyone. I'm Kazuhiro Sasaki, Philip Japan. Today, I'd like to talk about the outlook of the Japanese stock market through webinar. In Japan, the Tokyo Olympics scheduled to be held in July this year has been postponed to July next year. I would like to briefly explain the current situation surrounding the Japanese stock market and its outlook toward next year. I hope this presentation would be informative and meaningful to you. Presentation consists of 8 points as follows. Overview of Japanese economy, overview of the Japanese stock market, COVID-19 and paradigm shift, additional monetary easing by Bank of Japan, corporate governance reforms, stock picks selected, attention to J-REIT, and towards the 2021 Olympics. I'd be glad to take any question through webinar tool at the end of my presentation. Okay, let's begin from overview of the Japanese economy. October 1st last year, consumption tax rate, the same as goods and services tax in Singapore, hiked from 8% to 10%. In addition to that, October and November, 2 months in a row last year, super huge typhoon hit Japanese island. These headwinds on the Japanese economy have reduced real GDP growth rate of the fourth quarter last year to negative 1.8% quarter over quarter, or negative 7.1% on an annualized basis. Has Japanese economy already entered into recession? Let's look at this graph. Consumption tax rate was hiked from 5% to 8% just 6 years ago. And private consumption expenditure of the second quarter of 2014 decreased by 4.8% quarter over quarter. But private consumption expenditure of the fourth quarter last year decreased by 2.8%, much smaller than 6 years ago. However, unfortunately, super large-scale typhoon hit the eastern Japan and reduced the private capital expenditure by 4.6% quarter-over-quarter basis by chance during the same quarter. Japan has not experienced such large-scale natural disaster 2 years successfully so far. So I think excluding the negative impact of unprecedented natural disaster, Japanese economy was not as bad as what the number of real GDP growth rates showed. Let's move on to the next topic, overview of the Japanese stock market. Despite consumption tax rate hike, Japanese stock market rise significantly. Nikkei 225 price increased from August to 20,110 yen to January's 24,115 yen. In my opinion, There are two reasons behind market rise. First, new economic measures with such large scale as 26 trillion yen was announced in December last year in order to support the economy. Secondly, United States FRB changed the policy of balance sheet to expand its asset. But since last January, as you know, outbreak of COVID-19 has hit the market and Nikkei 225 price plummeted to 16,359 by 32% in 2 months. Let's see this chart. This shows 2 years FRB's total asset amount and Nikkei 225 index price. This graph shows that Nikkei 225 price turned around to rise just from the time when FRB's asset amount changed the course from decrease to increase. And both Nikkei 225 price and the amount of FRB total asset have the same trend until late January with each other. Additionally, let me show this graph. 11 years Nikkei 225 price and its weighted average book value per share. March 2020, last month, and now is the time when Nikkei 225 has been priced under its book value for the first time since Lehman shock or global financial crisis. So let's move on to the next point of COVID-19 and paradigm shift. Do you think that COVID-19 might call for the end of the era of globalization? Under globalization, people, things, money, and information can move freely around the world, and people can buy more at cheaper prices. These factors led Japanese economy to deflation and negative interest rates. Winner of the globalization was USA. US economy and stronger dollar, weak yen pairs were the most important factor for Japanese stock market to rise. Nikkei 225 price is more sensitive to US economy and strong dollar, weak yen pairs than topics. Due to COVID-19, people and things are prohibited to move freely. People cannot buy what they need even at any high prices due to supply chain fragmentation or disruption. Will prices and interest rates stay low forever despite the lack of daily necessities? And under the age of stopping globalization, domestic demand and consumer purchasing power will be more important to economy and stock market. So weak dollar, stronger yen, and cheap oil prices will be more favorable and make it possible for Japanese stock market to rise. Topics will be more sensitive to domestic demand than Nikkei 225. And domestic demand related stocks would be more attractive than export-oriented stocks. Let's go on to the next point of additional monetary easing by Bank of Japan. Target purchase amount of ETF has increased from 6 trillion yen a year to 12 trillion yen a year. Until March 13th, Bank of Japan purchased 102 billion a day. After March 17th, Bank of Japan is purchasing 204 billion yen a day. Due to this additional monetary easing, Nikkei 225 price so far bottomed at 16,356 yen on March 19th and advanced to 19,564 yen on March 25th. The increase in target purchase amount of ETF is thought to give larger impact on topics than Nikkei 225. This graph shows 10 years NT ratio. NT ratio means Nikkei 225 price divided by topics. On March 31st, the end of the last month, NT ratio was 13.48. And 10 years average NT ratio was around 12.30. So I think NT ratio will approach 12.30. The average of price level of 10 years. So the topics performance will be better than Nikkei 225 in the near future for the time being. Let's move on to the next point of corporate governance reforms. Tokyo Stock Exchange set corporate governance code to require listed companies to comply or explain. One of the most important goals of corporate governance code is to raise ROE, return on equity. Return to shareholders. Dividend increase, repurchase of stocks are expected to increase more and more in the future. And elimination of listed parent subsidiary pairs is also expected. This has mainly two purposes. First, protection of minority shareholders. Second, parent companies focus on core business. Make subsidiary be a wholly owned company with premium prices. So listed subsidiary companies would be great opportunities for shareholders. And this table shows a comparison of Japan's topics with United States S&P 500. In PBR, price book value ratio, and ROE, there are a large difference between topics and S&P 500. In order to raise ROE, more repurchase of stocks would be expected. Elimination of listed parent subsidiary pairs can also be effective for raising ROE. By repurchasing shares, book value can be decreased, so PBR would be higher. Japanese listed companies are thought to have more capacity to increase ROE than United States listed companies. This would be one of Japanese companies' good points compared with United States companies. Let's go on to the next point of stock picks selected. The first stock picks is Japan Exchange Group, JPX Group. It was established in 2013 as a holding company through the merger of Tokyo Stock Exchange Group and Osaka Stock Exchange. Its affiliated Osaka Exchange is scheduled to become a comprehensive exchange by making commodity futures such as precious metals transferred from the Tokyo Commodity Exchange in July this year. One of the reasons why I pick up JPX is its revenue is correlated to trading volume of Japanese stock markets. This graph shows 2 years daily trading volume in Tokyo Stock Exchange first section and Nikkei 225 price. Look here. Trading volume increased significantly after COVID-19 shock, though Nikkei 225 price plummeted. This trend is expected to continue. There are additional reasons why I pick up this stock. First, stock index futures. Topix futures trading volume April to February increased by 7% year over year. The more volatile the stock market price, the more trading volume of the derivatives. And second, derivative trading on weekday holidays scheduled in the near future, like the SGX or CME. Japan has many national holidays, so this will contribute to the higher revenue. And third, after commodity futures are transferred from the Tokyo Commodity Exchange in July this year, Japanese investors' interest in commodities market is expected to increase significantly. So this would also lead to the higher revenue. Let's go on to the second stock picks. NTT. NTT was established in 1952 with full government investment and privatized in 1985. Gariba of domestic telecommunication and monopolized regional fixed line network, high market share in mobile and optical lines. NTT Docomo and NTT Data are its subsidiaries and are owned by 64% and by 54.1% respectively. The reasons why I pick up these stocks are as follows. First, market capitalization of NTT is 10.09 trillion yen, and its subsidiary, NTT Docomo's market cap is 11.02 trillion yen, and NTT Data's market cap is 1.43 trillion yen. on March 26th basis. It looks like strange that parent company's market capitalization is less than its subsidiaries. So that gap would be opportunities to buy. Second, market cap of Verizon Communications in the United States is more than 21 trillion US dollar on March 26th basis. Considering that the NTT is more dominant in Japan than Verizon is in the United States, I think the market cap of NTT may well be closer to Verizon Communications. And third, entry into local 5G communications that started December last year will be a tailwind. And fourth, capital and business alliance strategy for smart city with Toyota and Zenrin. The smart city means advanced technology of the Internet of Things that efficiently manages and operates infrastructure and services and considers environment. And let's move on to the next point of attention to J-REIT. Target purchase amount of J-REIT by Bank of Japan increased from 90 billion yen a year to 180 billion yen a year. Until March 13th, Bank of Japan purchased 1.2 billion yen a day, while after March 19th, Bank of Japan is purchasing 4 billion yen a day so far. J-REIT is mainly invested by financial institutions and life insurance companies as an alternative to bond investment. And J-REIT was sold all at once for fear of impairment loss immediately before March accounting settlement. This was a great opportunity for individual investors to pick at very attractive price. COVID-19 polarized J-REIT into tailwind types and headwind ones. Tailwind types are logistics facilities and residence. Due to expansion of e-commerce and work at home. And headwind types are hotel and office. This graph shows 11 years Tokyo Stock Exchange REIT index of a day and book value of the index, and how attractive the sell-off last month gave individual investors a great opportunity to buy. On March 19, TSE REIT index was priced under book value. And average expected annual dividend yield surpassed 6.5%. But the next day, TSA REIT index rebounded sharply over book value. So the chance was only one day. I would like to introduce a logistic facilities type of J-REIT, of GLP J-REIT. A J-REIT, GLP J-REIT is a J-REIT specializing in logistics facilities sponsored by Japan GLP Corporation, a Japanese subsidiary of Global Logistic Properties Limited, an international leader in the development and operation of logistics facilities. It is the largest logistics facility specialized J-REIT. Let's move on to the next final point of towards the 2021 Olympics. The 2021 year will overlap politically important schedule with Olympics. First, the election race for the leader of the ruling LDP, Jiminto in Japanese, in September 2021. Second, its House of Representatives election in November 2021, unless being dissolved. Because it will be difficult, something politically drastic during the half or more period, half year or more period before Olympics, Prime Minister Shinzo Abe may dissolve House of Representatives ahead of schedule. And political situations may change ahead of schedule, right? 2020. Generally speaking, especially in Japan, national election tends to be a catalyst for investment opportunities. In addition to that, there's another thing to be considered towards the next year. That is, natural disasters such as torrential rains and typhoons increase in size scale year by year. They hit Japan Island July and September 2018. 2018. October, November 2019. Sorry. Japan may experience them in summer or autumn this year. Global warming issue will continue to be important. National resilience will also continue to be important issue. Financial proverb says, buy a straw hat in winter. That is to say, buy stocks out of season and sell in seasons of popularity. Related to natural disaster, I would like to introduce the stock of REIT Kogyo. REIT Kogyo was established in Sendai City in 1948. The company engages in civil engineering work, flood protection work, foundation and ground improvement work, repair and reinforcement work, environmental restoration work, with a reputation for its technical capabilities, general civil work, and construction and other works. Look here. This period was the time of natural disaster. So this stock tends to rise during the season of natural disaster. I have covered today's contents, talking about the following points of my presentation.